Good early morning, Bruce here. Let's jump into BITO and YBIT. No new trades. We're still staying at 400,000 shares. I had commented several times, so it gets incremented in 25,000 share blocks called a creation unit within YieldMax. So here we have 5.9 in the books. So BITO, the futures commodity for BTC, which is a ProShares fund that YBIT tracks. So it's really a very good mechanism for tracking BTC. So that was up 0.56 of 1%, right, from 25.22 to 25.36. We've also got, usually I'd say 95% of the time we see when these are up a little bit or they're down slightly, we do better. In this case, we didn't yesterday. In many of the cases we do. Look, this was down 0.19, we were up 1.64. The day before, this was down 1.5%, we were only down 0.6%, right? Less than, barely more than 0.5%. So in this case, we were a little bit worse. Let's take a look. I'll put this on here. This being a BITO chart. Okay, and then I can show BTC if you want as well. I'll do that at the end. So this is sort of pre-market, right? Since it's still 3 or 4 hours away. It may not officially be pre-market in that case based on the hours, but then it's aftermarket, right? So it's 25.58, so it's up since the close, which was around the 25.33 level, right? And that's what we need. We need this to start moving up. There's only one weekly when we jump in here. So we've talked about what it did. No new trades. Let's go over and look at cash. Nothing really going on there. Remember, these treasuries are the bulk of what's in these funds, along with the sophisticated, the synthetic option, and in a bull or a long stock synthetic, it's a buy a call, sell a put, which independently each transaction is a bullish bet. And then on top of that, they sell naked weekly calls to try and collect income. And if you run too fast, too quick, you run by that call and it costs them money. Otherwise, that's what allows them in a slightly down environment just to be collecting that time decay portion of the call that they sold without actually owning the underlying. So that's a lot thrown at you, but I'm just going to keep repeating that education so that those of you that are trying to understand a little bit better can do so, and those that don't, I'll just make sure at the end I tell you what the status is, right? I'm happy with either way. So let's go look at the only problem area I'll point out. We have actually two synthetics. We have a near-term synthetic that expires on 5/17, right? So that's 6 trading days, right? A week from today. So you got 6 trading days, and we're setting 750,000 in the hole, if you will, right? But along the way, we've been collecting money. So let me show all that to you by looking. And then we have one other one, which we've collected 130,000. That's positive. I mean, it's a negative number, but we've been paid that. The negative just says there's a liability out there. Well, actually, with the trading, the liability is a little greater. So this one, but this isn't a problem because it's all the way up to 621. We're only 2.46% behind the strike. So this one's well placed, well timed. I think we're going to make some really good money on this one. This one is not so good, right? We're going to have to close this out very likely today or early next week. If I had to bet, I think they're going to do it today. So let's see how that projects itself in looking at holdings, and then I'll jump, well, actually, I'll take you to the weeklies. So this is where we sell calls to collect additional money that's different than the synthetics I just showed you, okay? We collect money along the way when we write the synthetic, either negative or positive. It depends on where we are in terms of the strike price. So we've got $107,850 of calls that we've written. So we want to cash those in at the end of the trading day today. And if so, that gives us 27 cents for a payout, right? So think about that. If we got 27 cents every week just on the weeklies, that would be $1.04, right? Which is not a bad payout. I mean, we can go through and calculate the yield on all that, right? But basically on a $20 fund, right, we're trading at 1958. So if you've got $1 a month in 12 months, you've got 1958 divided by 12, right? Whoops, gotta put something in here to reflect that. And we take away 1, and we get 63.17%, right? That's how you go about doing a formula. So that's 63% return. Not a bad return at all, right? And there's going to be times where our synthetic makes us a bunch of money. Like I said, I think those in BITO themselves, I think they had, what did I get? 338. I think I got $1.38, $1.44 per share. For a long time, it wasn't very high, but it's come up. But that's also on a $25 stock, right? And I think when I bought it, it was around 28 for BITO, and I got paid $1, and then I think this last one was really a good payment. I recall 336 is what I got. Yeah, so I think it may have been as high as $1.68. So I think you're going to see those kind of payments, $1 to $2 range on YBIT. And so the dollar range is going to constitute 63% annualized, right? So I think you're going to be looking, this thing could be 100% when crypto gets cranked up. So a nice potential yield. So anyway, let's look at those individually. So again, this says BITO was up a little bit. We were actually slightly down. IV is the volatility of the underlying stock that reflects the premium paid in the options. The option market calculates it and determines the premium on an option. So where are we in terms of trading? I didn't update the chart. I actually did, but I didn't replace it because to me it's not doing anything. But if you look here, we're up a little higher. We're at about the midpoint if you draw a line right down the middle of this. So we're right at 25.36. Well, look where we've got room to go today, because this is the last trading day. We can run up on 930 contracts up to 26.50. We can run all the way up to 26 here and not lose any of that money. Well, let's go look at how much of this 107,000. You know, this guy, we're already over. But when you see how little, it's a pittance, right? So let me show you that math over in holdings, right? So on the 1980 that we can run to 26, we've already captured 81.58%, right? So they paid us 75,000, and right now we could buy it back at 13,000. And as long as it doesn't go to 26, we'll end up buying it for a penny or two at the end of the day. And we'll have captured all that money. And on this guy, we're already 91%, right? This is up at 26.50. So it's only 2.5 cents. So we're going to collect over 100 grand right here. This looks like a big number. If this negative 25 was on the 75,000, I'd say, uh-oh, we're going to lose a lot of our 75,000. But in this case, it's 90 contracts that were written at $25, right? So even if we went to 26, okay, the math on that, if you make this $1, right, from 25 to 26, you know, it looks horrible there, but we were paid $37.80. We'd lose about 6,000. So we would do so much better on our synthetics and everything else that on 90 contracts, it's not a big deal. So I just wanted you guys to see how this math works, right? But if it was the opposite, if we were red or negative up here on our big guys, I'd be much more worried. So this is a pittance, right? We go back and we look at May, and you see how we wrote those, right? We wrote these 90 and we got 42 cents, but we wrote them at 25, right? So we only collected $3,780. So technically we only give the $3,780 all the way up to 25.42. It's a break even, right? Because we wrote the strike at 25, they gave us 42 cents. But all the way up at $26, we collect all of these 100%, and we give them back, you know, 9,000, and they gave us almost 4. So we're going to lose 5,000 there, but we're going to make, you know, 103,000 over here. So, and I love to just educate, so all of a sudden people's brains start going, oh, okay, I get it. I see the impact, right? So in our holdings, these are the guys. So let's do one more look down here. So I started laying this out. We're actually getting a little better. So I can do 4 days and just keep pushing the data over. So these two synthetics, right? This one is the horrible one, the 29. And at that time we were up, I think, around 28 or 29 when we put this position on when the fund first started. But BITO's come down, BTC's come down, right? We're, as I showed you, we're up in the pre-market at like 25.59. So that's trending well, and that's going to have these things come down in value. So even if they close this out today, maybe they're going to close it out at 675 or something. No need to close this one out because, oh, I wrote 719 on there. But I honestly need to check. I thought that was 621. Let me take a look at another. I'm on a second screen here. That is 621. Okay. On these guys. So it is not 719, which is a very popular. If you've got any other EOMax funds, all of their synthetics are written. They're always on a month, right? They're always on the third Friday of the month, known as the monthly. As options have become more prevalent and there's more derivatives and more people want to play options, they have weekly options. There are some daily options. There's always been monthly options. And the monthly options are always the third Friday. And that's where institutional persons trade more, not exclusively, but they trade more because you see in here, this is institutional money, and on our weeklies, we're writing them once a week, right, to collect premium. But this is on a monthly, and this one's on a monthly where they put their synthetics because of the volume typically involved. Although this volume is big too, it's just what they tend to do. And they may even have to within the flex scheme that they play in. So this is trending down a little bit. You know, if we could move up closer to 26, and I don't worry about this one. This June 21st, this is the bottom number here, this portion, the smaller number of the two. but this one needs to get closed out. So anyway, we're doing well. We closed at 1958. The share count, 400,000 times the net assets, is saying we're worth 1933. I have no problem. We're trading at a premium. Nothing really to show you on the underlying BITO. We can go over on the payment. So I'm calling this, we have a pending 750,000 loss on our 517. So my gut, if we move up today, they may not take it off, but I'll bet they do. And then what they'll do is they'll take the money that they close it out on and just go put it in the 621. They could go all the way to 719, but honestly, there's more money. The longer you go out with the higher IV, the less premium. I mean, you make more, but it's not geometrically equal, right? So if I pay a premium of $3 a week, right, maybe this price I can get, it goes 3, 5, 50, 8, 10, like that, right? So all of a sudden this is 1 week, this is 2 weeks, this is 3 weeks. So the same thing happens in months, right? So at 1 week I get $3 time premium. At 2 weeks I only get $5.50. And at 3 weeks I get 8, and at 4 weeks I get 10, right? So you can average out and see that this is $2.50 a week, right? And you start seeing the reduction, especially when you have high IVs like we do in these. I mean, they're much higher if you're in Misty or Coney, but BITO has a fairly high one. So I think they'll either go to the 719 or they'll write more at the 621. And where they go may determine which strike price. But I have a gut that they might go 621. Hey, let's see what happens. Anyway, I think this fund is set. We're currently at 58 cents if we took our short call income. Now, understand that if we close this out, let's say with the benefit of the doubt and it's 650, then all of a sudden we took a 650 loss, so this synthetic becomes a positive, right? I don't want to mess my numbers up, but I could go out here and say, let's see, plus, so all of a sudden at, oh, I'll tell you how we do it. Right now, we've got 718,000. It's saying that equates to $1.80 based on the share count. So all of a sudden, if we take that bigger synthetic loss, and let's say it's 650, then we're going to be setting, it's going to knock this way down. It's going to leave the 58 cents alone, but this is going to be like, 70 cents in total. So it's going to knock a big portion of this down, because I have a feeling we're going to move up today, and if they do close it, they'll close it, under maybe about 700,000. So that's what we're looking at. We got many weeks, and then our synthetic is really set for Bitcoin to move. So we really need this chart. We really need this thing to start moving up to this line, get up to 28, 29 again. It looks like we bounced just like I thought we would with this vortex of support here. And we're trending up. We're probably right about where my arrow is, or my mouse is, right now. We're right near the midline of this. Okay, guys, that's what I got for you. Let's stay positive. Things are looking actually pretty good here. All right, that's Bruce out. Again, this is not financial advice. Check with your financial advisor before putting on any positions in the stock market. This is for fun and education. Okay, see you guys. Bye.